Hey, I'm Dan Fitzpatrick at StockMarketMentor.com. And look, the market's really rocking. It's starting to kind of melt up. And I thought I'd do something a little bit different this time on this trading video because a lot of stocks are kind of running away. And, I'm not seeing a lot of good entries. There's a lot of stocks that it's nice to own. But as far as putting new money to work, I don't see, we see a few of them, and I'm talking about them in this weekend's update. But I thought I'd go a different track here with this free video. And it's why, you might ask. This is why, because that's a really stupid joke. Sorry about that. Anyway, you can see, though, we've got this downtrending line here and then uptrending line here. So this stock is kind of getting to a critical point. I'd say it's kind of pinching. They report earnings in a couple weeks, right? So not next week, but the week after that, they report earnings. And if you're looking at a stock and trying to get in it at the right time, when is that? I recently taught a course called Turning Patterns to Profits. And the idea was that we want to be in stocks that are in what's called the markup phase right here. This be the accumulation here. Not a whole lot going on there. I get this run, but that's not what I'm talking about here. Typically, you don't really want to be in stocks that are in basing patterns because you're not making any money. Why aren't you making any money? Well, because the stock's in a basing pattern. So it might base for a week or 9 years. We don't make money then. We make money once a stock starts to move out of the base. And then we also don't want to be in a stock when it's in this distribution, which you can see with increasing volatility, more sideways action, et cetera, et cetera. And then finally, we sure don't want to be in a stock when it goes into the mark down phase. Those are just general rules here. So this is the stuff that we want right here. So we did this, we're down here, up a little bit, and now we're zigzagging down, and that leads us to where we are right now, which I see a little kind of a pinch here, a pop. So this is what I'd look for. Again, the company reports earnings on the 12th. I would set an alert for $60. And that's barely above where the stock is now. If the stock breaks out above $60, I think you could take it for a ride. Maybe look for it to run up close to 70. This isn't a prediction. This is a hypothesis. If the stock breaks out above 60, look at volume. If it's on heavier than average volume, look, I'd look for a run, like up to $70 even before earnings are announced. Okay, so that's my trade, and I'm sticking with it.